Hey guys, welcome to the channel. This video will be an overview of my investing strategy and journey. For today's agenda, I'll first introduce you to the channel. Second, deep dive into the calculated leverage strategy. And third, walk you through my Robinhood account. Who am I and why am I doing this? I'm 24 years old, looking to build long-term wealth at an accelerated pace while actively managing the risks. This channel documents my real-time journey using a calculated leverage investing strategy. We'll explore the tactics I use, the trades I make, and the lessons I learn along the way. Important, this is for entertainment only. This strategy will require an understanding of margin and simple options trading. If you're not familiar with these concepts, I recommend watching the videos in the description. Step 1. I start with my initial investment capital. This strategy doesn't require me to contribute money often, except for adding funds during severe market downturns. Step number 2. I allocate 80% of my capital to SPMO and 20% to IDMO. Step number 3. I introduce a margin loan to leverage my initial capital. I use as much margin to initially set my buffer at 65 to 70%. Step number 4. I generate income to help offset the interest on the margin loan by selling puts with around 85% probability of profit on stocks with high implied volatility. If I'm assigned these shares from selling the puts, I switch to the wheel strategy by selling covered calls on these assigned shares until I have at least broken even. Then I sell the stock. I actively manage my risks by maintaining a large margin buffer. I aim for an initial buffer of 65 to 70% before selling any puts. Afterwards, I sell enough puts for the buffer to decrease to anywhere within 30 to 40%. I also adjust my margin usage based on CNN's Fear Greed Index, using more margin during market downturns. I can also add money from my paycheck into my account to reduce the chances of a margin call. The outcome of this strategy is to accelerate portfolio growth. Now I'll cover my intent behind my core portfolio picks and details on the Fear Greed Index reference for margin usage. Use a total return chart of SPY, SPMO, and IDMO overlaid. While past performance isn't indicative of future results, SPMO has beaten the S&P 500, and IDMO has lagged the others. SPMO was chosen for its capability to beat the S&P 500 while having lower historical drawdowns. IDMO's allocation at 20% was a deliberate play to diversify internationally, lowering geographical risks while maintaining enough focus on US markets. Furthermore, these ETFs have low margin maintenance ratios on Robinhood. The CNN FGI Fear Greed Index measures overall market sentiment from 0 extreme fear to 100 extreme greed. It shows whether investors are mostly worried or overly optimistic. The table to the bottom right takes the FGI as the input, which ranges from 0 to 100. The output is the percent of my maximum allowable margin I should use. For example, if the FGI is 0 to 20 extreme fear, the rule says to use 100% of my margin. From 20 to 40, margin usage decreased linearly according to that corresponding formula. From 40 to 100, margin usage decreases more gradually, following the other formula. In short, plug in the current FGI X into the equation for its range, and you'll get your target margin usage Y. This table gives me a simple rule for how much margin to use based on the FGI. Use more margin when fear is high, FGI low, and less margin when greed is high, FGI high. It scales down my margin use gradually as sentiment shifts from fear to greed. Now I'll walk you through my Robinhood account. This includes the margin interface, usage, options list, and collateral, buffer. I'll also show you my 1 week performance. Now we're into our Robinhood account. So step number 1, initial capital, invest in the core portfolio. This is my core portfolio. Ignore the Google. So mostly it's SPMO and IDMO. And now let's look at buying power. this is where the margin comes in. Before I had these puts, my margin buffer after using this amount of margin came out to be 65 to 70%. This is the amount of margin I'm actually being charged interest on. Options collateral, 6.7K. This is from these sold puts. I'm actually not being charged interest on this amount of money. These sold puts generate me income that I can use to pay off the interest on this much margin. After I sold these puts, my margin buffer went from 65 to 70% around there to 47%. One thing to note is that options collateral has a 100% margin maintenance ratio, as you can see here. But this is okay. This means that once I get assigned shares during a down market, my margin buffer would actually increase, reducing the chances of a margin call. This has about 1 week performance. Obviously the markets are super high right now, but I'm excited to see where this strategy leads. Thanks for watching and stay tuned.